Everybody, hello, welcome to another geopolitical analysis video. Thanks so much for joining. Thanks so much for the views, the support, the likes, subscriptions, those who are disappointed, and those who are encouraged and in an optimum, in a positive, optimum headspace in order to appreciate the yields that are coming. There are great things that are forming. Great reset is upon us. Great technological advancements that will change the aspect of payments, change the financial landscape, and will actually determine those who will move ahead and those who will be stuck in an older system of what they call TradFi, traditional finance. But hey, the aspect of crypto is not for everybody. I'm not saying crypto is the panacea or Bitcoin is the panacea. I do believe it is the Trojan horse in order to on-ramp people into the digital era. But in this case, you may be religious, you may not be, you may have your own ambitions and also your own opinions, but I want to make this clear. What we're doing here is not 100% certified. These are predictions from my experience. I've been trading at least 3 years actively with hours, over 10,000 hours spent in trying to figure this out. And even before, when I was trading, I've had this channel since 2019, 2018. So let's get into it. Bitcoin. I believe right now, this is the weekly. I believe right now we're in a situation where the sell-off that took place, 108,000 down 16%, is a blip, is nothing. In this bull market, okay, if we were really to talk about a correction, 15 or 16% in the past would be seen as just a bounce, nothing. This is nothing. Let's put it into perspective. Okay, so let's go back because we have to. Okay, let's go back from the beginning of this bull market, March 2020. Let's start from there. As soon as the halving happened, which happened around this period, look at the run-up that I had. But in between, look at the deep 37% pullback that it had here. Let's look at this. 20% pullbacks that it had. Let's look at this. Before it hit the top, you had at least 25, 28% of a drawdown before it went higher, and it went to its higher highs here. Okay, another drawdown, another test. So you had 19%, and then you had an additional 25, 26% before you reached the all-time high. Okay, and then you had a drawdown of 50 something percent, and then you rallied that back a little bit higher to go back to the 69,000. This M type of pattern, okay? Everybody was screaming that we're going higher, but you know what? It was just a double top. Sometimes a double top will do that. It will go a little bit higher to trick the longs. And let's see what happened after that. Well, what happened after that? We had that massive 50% correction, which people got used to. Deja vu, they experienced that several months before. FTX, yada yada, took us even further down. You remember, 67%. Now, I sold everywhere. I sold at the top, I sold at the mid bottom, I sold even at the bottom, I have to admit. But look at this. You spent here several months doing this, what we call rounding. This rounding of pricing, where it's retesting prices. It goes up, then it comes down again. It goes higher, it's coming down again. It's going up, it's going down again. You know, you were stuck in this range from this date of the week, May 2022, all the way down here to October 2023. So for a year, okay? Not even a year. What ended up happening, we all know, the rally for Bitcoin that we're now experiencing took place. Okay? And listen, I'm not going to ask you why you didn't buy in those levels. I'm not going to talk about, oh, I thought we were going lower. I was on the camp we're going lower. I missed the boat of buying here. Okay. I started buying here. Okay. I started buying here. Okay. I was buying here. Okay. But let's look at this rally, this tremendous rally that moved 170%. Throughout that period, you had drawdowns of 22%. You had drawdowns of 25, 28, 34%. And you were still in the infancy of the bull market. We shot up to 108,000. So what now? Okay? What now? What is the problem now? Why are people freaking out? Why are people so pessimistic? And why are people thinking that this is the end? Look, the way how this came down, sure, big engulfing candle that negates the power of these candles, but still is not closing below this candle here, is not closing below this wick here, is not closing below this wick here. It hasn't closed yet, meaning that this is the area where a heavy volume is buying. Okay, we can see this, that the selling pressure has decreased. Okay, this is the weekly. This is the weekly. Look at this rounding type of price that might be forming. And look at this smaller candle here. I know people don't believe in candles, but candles were made by Japanese rice sellers. And the detail of this trading can be proven thousands and thousands of times. That the importance of candles, candle closes, and wicks show where the price is going to go. And we're talking about possibilities. We're talking about percentages. Okay, so you want major percentages on your side. In this case, am I saying that it's over? No, I don't believe it's over. But look, every time Bitcoin reverses, look at the formation of these candles. Small candles with a long tail. Smaller candles here that are signal reversal. Smaller candles here that show a topping, but then are not being confirmed because you're seeing that there is buying pressure. Okay? Same as here. Oh, you see this candle? This candle shows direction, change of trend. Coming down here. Oh, what does this candle show? A large tail being bought up. Buying pressure to push up. Come down again, coming up again. Again, this long tail. That suggests a lot of buying when you have a longer tail. Okay? When it's at the very bottom, it shows a bottoming phase. When it's at the top, it just signals that there's a lot of support in that area. And you know, we saw it here. Support, 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 support. Until it took off, it retested half of the support area, and then boom, to 108,000. So if you're looking in the 10-minute chart, 15-minute chart, 1 hourly, you can see this equally. But if you're on the weekly and you're observing, you're saying, I'm noticing the candles here have a longer tail, okay? The longer candles here, longer tail. If you're a smart investor, you're saying, I'm noticing a pattern here. I'm noticing that there's buying pressure here. There's buying pressure in these areas here. And then you see the shot up. Okay, pardon me, I'm not a painter. I'm sorry, and this is not the best. But what I'm trying to show you over here is that every time you see these wicks, it signals buying pressure, interest, support. This is great support, this region. And we know this was consolidation also of a bull flag. Okay, very bullish. Whenever it's 45 degrees to 90 degrees, very bullish. Okay? And that's why it shot off with such potential, with such ferocity. Here, you could say we're consolidating as well. We could go like this for 2-3 months. We could. It's a possibility. But if this support holds here, this 90,000 hey, 89,000, this support here, if it holds for the next coming weeks, that means that the buying pressure is coming in, it's a support, and we should be able to see this go higher. Okay, I don't think this is the top. It doesn't look like a top to me. So let's take this a step further. What did I tell you in the last few videos? I'm sorry, people, but I have to get a little bit more tenacious over here with the tonality, because I feel that a lot of you are disappointed, and I want to pump you up. I want to pump you up because I know that mentally it's very hard. I'm below I'm below with the miners. I've been bleeding heavily, but I have conviction. I have conviction because I'm seeing the technicals, I'm seeing the foundations, and I'm being patient. I'm being patient. The smart investor has to learn two things: to be patient and to have discipline, and to stick with your plan. If your plan doesn't pan out, that is all right. You need to know when to use your option B and option C. If a crowd is traded, if a trade is crowded, then you pull back and you say, hey, it's getting too crazy here. Let me reassess. Okay? In the short term, Bitcoin was a crowded thing. You were hearing it everywhere. Okay? But the retailer is not 100% in. And a lot of people are still yielding from the government money because of the higher yields. So that's what I told you the last few videos. You have to take a look of what? You have to take a look over here. Okay? You have to take a look. Excuse me. Let me move this camera over here. You have to take a look of the interest rates. Okay, people? Sorry, having some technical difficulties here. Okay. You have to take a look of the interest rates here. Okay, look what's going on here. Okay. I'm going to look at the technicals and also the foundation. Okay. Look at this. We got one shoulder, we got a head, we got another shoulder. This, you can say, is a head and shoulder. Why? Because it follows the formation. Beautiful symmetry. Okay, yeah, this shoulder is a bit off, but it's still, when you see that the wicks are not all over the place, like if there are wicks over here, negating it, that's it. This is the neckline. Head and shoulders has to play either straight or with an angle up. It can be a head and shoulders like this. It can be inverse head and shoulders like that. Okay? If you have a head and shoulder that is like that, or that is straight, I know it looks like a dick, but I'm just saying, it's a beautiful organ. It's everywhere. It's in nature. Deal with it, people. These are inverse head and shoulders. But if you see a head and shoulder that is not this way, but it's like, the other way, like much bigger, slowing down like that, this is not exactly accurate. Anyways, the point is that if you look at the angle, it looks good. It looks good, and the neckline is a little bit too high. The neckline would be something like this, okay? If you're below the neckline and it's staying there for a while and consolidates, that's how you know. I'm seeing a head and shoulder patterns, and I'm calling it now. I do think, after looking at things, this is about, here's the neckline, okay? Head, and this is where I think rates are going. I said it. Okay, it could be here. Okay, could be over here. This is major support here. This is where I see rates going. I told you I was afraid rates would go much higher if they closed above the higher prices here. We haven't seen that. Look at today's drop. Okay, very interesting. Think about this. Year-end selling is a thing. Institutions do that. Retailers are not really aware of this. Window dressing is a thing. Go look up window dressing, tax loss selling, etc., etc. Institutions push stocks, and then gulp it all up really fast, especially the ones that are on an uptrend. So look at this. Look at this. Head and shoulders, what I'm showing you, struggling to get up. And this bounce seems weak. If this bounce came up here, then I would tell you, I'd be selling like crazy my stocks and crypto and everything. Look, if we made a bounce that was 20% higher, yeah, about 20% higher to meet these prices again, because the more a price target is hit, the less likelihood is going to stay again. It will either break through or come down if it's on the downside. This is a law. This is a technicality, but there are price numbers and magnets. We operate with numbers in our head. This is a real deal. It takes place. I'm not seeing here a powerful bounce. What I'm seeing here, especially in the opening of this week, it made me think. I said to myself, if this goes higher with conviction and retest this area, we're going much higher. But I see that here in the short midterm, interest rates are going to fall. Look at this red candle. This is about 2% red candle. Okay? This might be the beginning of selling or the beginning of buying bonds, because this is an inverse correlation. That means that the interest rates are going to follow inflation. That means that we are, as investors, fearing that inflation is going to come down to the lower numbers. Okay? It's been in the stratosphere, but because of a recession, prices are shrinking. Money supply has been shrinking. At some point, everything comes back to the mean. Okay? Look at this. This is a 2-year. Let's look at the 10-year. The 10-year looks even weaker, and I'll explain to you why it looks even weaker, because here it was a fake out. So it looks like a fake out to me. If the fact is that you didn't challenge these prices, if this was a clear W pattern, which shows strength, is very bullish, this formation here, if this was a W, this should be now challenging this area where the two V's meet here in the middle of the W. Since the price is not challenging this, and I'm telling you, if it came closer, if this was opposite, there was 2-3%, it would blow right through it. It would come over here like a magnet. I'm telling you, this is what would happen. The fact that it's not doing this, it took a first chance, came down. It's trying again. It's coming down again. To me, doesn't suggest strength in the movement. And I do think the Fed at some point wants to come in. The Fed is probably buying the debt, or investors are realizing that recession is coming in, because there are some insiders that are noticing that the purchasing of goods, consumerism, spending is not as high as prior years, because the consumer has tapped out. Inflation, there's a saying, the cure to inflation is higher prices. You know why? Because at some point everything drops to the mean. The higher you go, at some point something breaks, and the ladder has to drop. The shoe has to drop. So gravity exists in everything, even in the stock market. So in this situation, I know there's a lot of talk about yield rates going much, much, much higher because of the debt market imploding. Yes, that will happen, but it is not now. It is not now. And I believe that first we need to create the crypto infrastructure of the government Bitcoin reserve, and then start having this debt implosion. Anyways, my point is, if we see in the next few days yields coming down like this, 19%, which it can happen in a few weeks. If this happens, not only are we seeing an incredible rally in the stock market and bonds, which I'm very bullish on bonds. I think people should be purchasing US bonds right now. If this happens, we might see another bounce and then much lower. I do think that overall, this is another head and shoulder pattern being played out. Doesn't matter you have another bounce here, okay? Doesn't matter. This is a head and shoulder pattern. And whenever you have this type of formation, even Bitcoin has shown this formation, boom, this rounding upward, that doesn't last too long. You see, you notice how we don't last too long in the upper levels. Here we did, but we keep losing this momentum. This suggests a rounding effect that is very common when it's the end of higher prices of anything. You can look at commodities, you can look at stocks. This effect exists. This curve here is showing exhaustion. Exhaustion. You had this parabolic move up, strong move, but the moves here are shorter, smaller, and they're not as powerful. Okay? They're not as elongated. So this is the case where the Fed is coming in, foreign investors, governments, what have you, and they're buying the debt. 30-year. Look at this too. You have this rounding. Just like I showed the bottoming, you have this rounding. You have this higher price where it doesn't stay too long. It's getting exhausted. That means there's selling pressure, buying of the bonds, and this is the 30-year. Okay? If this couldn't challenge, I told you that if this month, I told you in one of my videos, because I've been looking at this, if there was a close above 4.848% here, a clear close in consolidation, I was selling everything. I was going to go hide. I was going to go, just because that's when the debt market is imploding. We're already in a very high risk area, okay? The fact that it opened today, the beginning of the new year, okay? The beginning of a new year is starting with selling, dropping of interest rates. This shows us something. I think there is imminent recession coming in. People are fed up. They can't afford higher prices. And when they can't afford higher prices begets lower prices, because then companies, institutions put discounts on everything because people are refusing to buy. If you're a supplier and the demand is high and you keep rising the prices, and the demand keeps being stable and at some point is decreasing significantly, as we've been seeing, then you have no other choice but to lower prices, because you profited already enormously, that you can afford lower prices. And lower prices begets lower prices begets lower prices, because we live in the world of capitalism. Okay? That's how it is. That's the supply and demand. Okay? Supply and demand. Okay? Look at natural gas. You see that? I told you natural gas. I was quite interested in natural gas. Okay, I was very bullish on natural gas. I should have bought natural gas, but I was involved elsewhere. Look at this move. Why? Because the supply in Europe, the crunch that has been going on. Zelensky's been playing games. Europe has been undergoing certain strategic reserves that they have overused. They're not leveraging the Russian natural gas as much, even though there is that phantom fleet illegally, etc., etc. You're getting a lot of information here that could help you. I would be in a situation where if natural gas doesn't close here shortly, I'd be shorting this. But energy is good to have. Yeah, I would be buying, like I say over here. I would buy here on the third dip. If it falls here in this box, I'm buying hand over fist. So let's look at the Marathon. It's the best miner. It's the biggest miner. Has the most Bitcoin. I'm not going to get involved with other smaller ones, although they've outperformed Mara. Yeah, sure, okay. Look over here. What do you see over here? Whenever price was in this cycle here, it had a tremendous move. Look at this move. 106%. Whenever price was here, you had another 50, 60%. Then you had this tremendous 200%. So my point is that this area here now has become resistance. It's normal. That means you're going to hit it a few times. But this zone here has become major long-term accumulation. If we notice here, the dumping is institutional. The previous year was institutional for tax purposes, etc., etc. Because look at the tremendous volume. This is institutional. Retail is not pushing these prices. It's mostly institution. So this was your tax selling year. Now we're entering into a year of consolidation, smaller breaks, but I think Mara is preparing for a tremendous move that we might see it unfold. 200, 260. Hey, maybe higher. 300. It's possible. It's possible you reach these levels. But even if you start reaching these levels, these are beautiful gains. Okay? That's why be patient. Be patient. Okay, you think Mara, first of all, put it into perspective. Let's put it into perspective. Marathon right now has been accumulating after MicroStrategy the most Bitcoin. Think about it. The most Bitcoin. Okay? As an asset. They're holding it in their balance sheet. They're becoming bigger than any other traditional bank. They're holding one of the best assets that have performed in the face of the earth. What do you think is going to happen to their stock once Bitcoin starts hitting higher prices? Even if we assume that Bitcoin topped, how much lower do you think this is going to go? How much lower? It's already gone so much lower. You think it's going to touch again $3? You really think it's going to touch $3? If you look at the price of Bitcoin back then when it was $3, you'd be scratching your head. Why? This is a tremendous stock to hold. It's the best miner in the business. They're not going to go bankrupt. They're not going to go bankrupt. Okay, so my point is you should be buying over here. This is the area I'm buying. I'm buying here. I'm buying here. I'm buying. It doesn't matter if it's 16, 17, doesn't matter if it's 13. Even if it drops here, I'm buying. I'm never going to stop buying this. I'm stacking Marathon. Marathon is the MicroStrategy of miners. And to be honest with you, I think with this major consolidation here that has lasted a year and something now, I think that the price, even if it would shoot up like this, 300%, I don't think that you would have this tremendous drop down. I think that you could see some major consolidation here in the middle zone and move higher. Okay? Just like, think about it, it was less than $1 here and it shot up to $80. You could have made a fortune of a Rockefeller, even if only if you put 10,000 here or even 5,000. You could have made tremendous gains. Okay? Look at this. If you bought for $1, look at that. Look at those gains. Okay, maybe you didn't go that far. You went this far. 4,500% gain in less than a year. Or maybe what? Yeah, okay, a year. So my point here is people. It's, 40x, 40 something x. What else? What else? You know how many lifetimes you'd have to go through in order to experience a 40x increase in your wage? So don't be greedy, be patient, be disciplined. Buy the bottom. Don't be afraid. This is when you should be buying bottom, not when you are bullish, but when you're afraid. That's when you should be buying. That's my secret. That's my 2 cents. Let's see. I believe in the next coming weeks, we're seeing the next leg up of Bitcoin. I'm very bullish. And I think the next cycle is going to offer a bigger push for Solana, cryptos, etc. Thanks so much for watching. Please like and subscribe. I put a lot of effort here. I want you to reward me with that. I'm not asking for money, just your support.